On the cotton prices, but with that we have to get into a break. As we do that, here are some market opinion. This comes in from Eswar Prasad, who's professor at Cornell University as well as the former head of IMF's China division. So listen into what he has to say on the outlook for emerging markets as well as the big India opportunity.
It's clear that there is an opportunity here for India in terms of becoming an important part of global supply chains, and in terms of becoming a supplier of certain products where China has tended to dominate the market so far. And I've been quite encouraged, to tell you the truth, to see that unlike in previous episodes where the rupee depreciated, but we didn't see much of an effect in terms of India's export growth, we are seeing Indian exports doing somewhat better than they used to in the past episodes of rupee depreciation. And more importantly, we are seeing some high technology exports beginning to pick up. So they're not at a level yet where they would make a huge impact on India's growth. But I think this can be the foundation for India becoming a much more important part of global supply chains and moving up the value-added chain, moving into higher technology sectors itself. My view about China has always been that there is a lot of room with monetary and fiscal policies to stimulate growth in the short run, because you can use monetary expansion, either cutting interest rates, flooding the system with liquidity, or use government expenditures. In some areas, China certainly needs more expenditures in order to stimulate short-term growth. But right now, I think the economy is faltering because it is a combination of the drag caused by the determination to stick with the zero COVID policy, a faltering property market, which is really important for the Chinese economy because it accounts for a significant share of GDP as well as household wealth. And on top of that, financial system stresses that are beginning to bubble over. On top of that, you have a very unfavorable external environment. And that is also making it harder for China to use, for instance, monetary policy very effectively, because the Chinese renminbi or yuan has been depreciating very significantly relative to the US